Good day, guys. I hope everybody's good. Um, yeah, welcome back to our YouTube channel. And today we will be obviously looking back to the Nasdaq. This is to show how far it has come. Just for everybody's sake, this is a 4-hour chart. So now we're looking at the live market. You guys can see the market is moving. So this is the 4-hour market. So this is just a part two of the Quasimodo reversal pattern or reversal strategy, that I did share with you guys last week. So now, as you can see, that remember I did talk about, having um, 3 points where or three confirmation zones, So I think here, let me just write it down for you. Last week we only had we only had a low, a lower high, and a lower low. We only had these three. So the market was going up. It was somewhere around this area here, and I did talk about it going to create a higher high, a new high, because for the Quasimodo strategy to be valid, you need to have something of this nature. You might say, let's say, you have a low, you have a high, you have a lower low, you have a higher high. Then the market comes back and maybe go back that side, the upside, or it continue to go down. That's how it can go. It all depends on, but like I did tell you, you're gonna have two entries, which these two entries are always solidified. These two entries are always guaranteed. Even if you miss the first one, because this one was already gone by the time I did this video, you can still jump in on the second move, which is about to happen. Maybe today, which it can take place, which is the 23rd of January 2025. So if we can look at this, um, the distance in or pips is almost 9,000, which is 899 points, which is 9,000 pips from this entry here. So you're looking to make around about, if I'm not mistaken, around about 15,000 on a standard lot size, 0.01, not micro, standard trading account. So that's how much you're looking to make from this move going down, 15,000 per trade. So on a 0.01 micro account, you're looking to make at least 1.5 on a standard account. So without any further ado, um, I did notice also on the M15 that we did have something here of the same nature happening, but I won't really get into that. So I just wanted to show you that this Quasimodo strategy, it really works. So now you can backtest it however you want. You can use a demo or you can jump in, use your own funds, but always, like I did say, you will need to practice what is this risk management, proper risk management, meaning you always have a stop loss. Make sure that your account will be able to take the downside. It can always be able to take the downside, so the downside of this trade is about 200 pips, 238 points, which is around about 2,389 389 pips, so that's the downside, which by the look of things, if I'm not mistaken, we are looking at about 4,000 on a standard account and 400 on a micro account. That's what we're looking. That's the downside. So make sure your account is is able to take the downside of the trade. But as you can see, this is a more of a 1:4 kind of trade. That's the risk to reward ratio of this trade, 1:4, because the 200 and something can go like 4 times into the profit side of things. So hence I'm saying 1:4. um yeah. So we had a low, like I did say, we had a high, lower high, and then we had a lower low. So always remember these two are very critical to you. You need a low, you need a high, because these are your entry points and your take profits. These are your entry points and your take profit indicators. And I did mention that you can use pending orders. You see now the market hasn't really hit this point here. As you can see, the market hasn't really hit here, but should it come down and you have your pending orders here, the market will open your pending order, and then once it continues to go down, it will continue to go down in profit. But make sure that you also have a take profit on your pending order. You also have your stop loss on your pending order, so that you don't have to check your trades time and time again. You can just go back to the charts and check how far the market is. So remember, I did mention that this is not this. I wouldn't say the strategy is 100%. I wouldn't say it's 100%, but I would say that the strategy works. That's what I can tell you. It's not. I wouldn't say it's 100%, because it can always go to the downside. Maybe do a double low, which can take you out, which will hit your stop loss. Even there, you can go up there and hit. If let's say it opens a trade and go back up there, and then do it a double high or equal highs, and then drop down. So these are always the things that you can expect. So remember, I did say we anticipate what the market will do. We do not dictate, or we do not say no, the market will do this, because we don't control the markets. We just use patterns, proven patterns which have been used in the past, because the market focuses on the past, the present, and the future. But we use the past and the present to determine the future, which is by analyzing the data that we have on that the market has provided to us. That's what we always do. So, like I said, we always minimize our losses, and we maximize our profits. That is the only thing that we do in this instance. So we had this entry here on the upside, also the same amount of pips going up, and but look at this, by the grace of God, it did go up. But you see, the minute it entered your entry, it went down about something around about, I would say, almost 200 points, which is somewhere, yeah, almost 200 points, when I'm mistaken, 180, 190 pips. I mean, points, which is 1,900 point pips. So that is around about 3k. It went down by minus 3k before going up. On a micro account, it went down 300. It went up, you know, 4 times that. So, like I said, this is a 1:4 risk to reward ratio. This is the kind of trade that this is due to, the amount of, from the entry point to the stop loss, is due to the time frame that you're using. So remember, we're using a bigger time frame here, which is a 4-hour time frame. So hence the stop loss is this much. This is the how much you can lose in the stop loss. But if you were to use M15, or M30, M5, your stop loss wouldn't be so much great. If you were to spot the same setup on a smaller time frame, your stop loss won't be that much. It might be 1,000 rand, it might be a 500 rands, or it might be $30 or $70 downside, or $100 downside. And then your take profit might be one is to 3, or one is to 4. So you're making either $300 or $400, or even $500, based on the the currency that you're using, or I would say your lot sizes also, and per trade, how much you willing to lose per trade that you enter in the market. Your lot size will always matter, So, like I said, in instances like this, make sure that you protect your capital, and then you look to maximize in terms of your trade. So, and you don't need to rush it. As long as you have these three confirmation, your low, your high. Um, Sorry about that. As long as you have your low, your high, and your lower low, you can always be sure that your your first entry will go up, and then there is your second one. But even if you missed the first one, then you at least now you have your low, your high, your lower low, and your higher high. Then you can take the second entry, which is the current one that I'm showing you at this current moment. And that is it. That's the Quasimodo, yeah, reversal strategy. This is what we're looking at. So this is the update. So far, I did promise an update on how uh, where the market will be sometime this week. So as you can see, we are now at the higher high, and then we are about to take to hit, to enter our entry point. We are about to enter our entry point, and then we expect the market to go down. We are not telling the market will go down. We expect the market to go down based on the strategy and how the pattern reveals itself. You know, some will call it an algorithm. Some will call it the market makers moving the market. Some will say the banks or institutional traders are looking to push the market to the downside from this point here on. But that will all depend on on everything else. But should there be news events today? I'm not sure, but there is, as you can see, we do. Sorry, we do have a news event today. It's not even today, it's tomorrow. We have a news event tomorrow, and we also have a news event next week, you know. So we're looking to this trade to go down at least, hopefully today, tomorrow, and Friday. And hopefully even by next week. This is the kind of swing trades because of the time frame that you're using. This is an H4. This is a H4 time frame. So always keep in mind, the time frame that you're using. If you're looking to scalp, then look for this pattern on your M15, M5. You will find it there. That I can guarantee you. You will find it there. So let me try to delete this just to show you. Let me try to delete this just to show you. Yeah. And then now we can go back, and then we can say M15, 15 minutes. Let me reset the chart quickly. Yes. So you will find it on your smaller time frame. You will find this setup on your smaller time frame. So we're gonna be looking for something, of the same nature on your smaller time frame, like your M15, like I did say in your M15. Just to give you an idea that this pattern also, supports. It's always there on your smaller time frames happening. So let's see. Let's see. See. If you go back, let's go back. Let's see. Um, all right, let's try M30. Okay, we can take this one. It's not really appealing, but we're not making it up also. but we can also take this one here. So I would say whether we use this one, you can say, let's say this one here, this high and this low. Yeah, yeah. So let's say we have a high, we have a low, we have a higher high. Then the market, to came to your entry point. So this will be your higher high. So this is just the opposite of that one I was showing you, because we started with the low, but here we started with the high. So this is you look at it. That I would really advise that you don't force it. You look for more clearer patterns in the market. Because those can really then be clearer to you. Once you can trade them clear, then they can really help you with your trading. So we had a high, we had a low, we had a higher high. The market came, opened. Let me just take it from there. Then, yeah, as you can see, yes. So we had a high, we had a low, we had a higher high. The market opened, came to your entry, went a bit, almost to your to your stop loss, and then came down, rushing down, boom, hit your take profit, then created a low for you, and then came back up after creating a low, came back up to hit your entry point, and then you had you had this now you had the second entry. You had the second entry, which was here. Here the second entry, and the best part is it didn't even go down the second time. It didn't go down, just went up. you know and this is around about, let's say, 140, yeah, 144 points, which is 1400, which is around about 2.5 per trade going down, 2.5 per trade going up. The stop loss was around about 1.9, yeah, 1.9. So it's almost 1:1, you know, almost 1:1 trade if you look at it. So yeah, that's just about it in these smaller time frames. You can even find it on your H1. You can also find it there. But like I said, it will depend based on your trading style. Which one do you prefer? Are you a intraday trader? Are you a scalper? Are you a swing trader also? So this will then, the best part about this kind of strategies is this: you don't have to worry about any news event that is happening. You don't have to worry about them, because those are the kind of strategies that has been in the books. It's always been in the books. It's those strategies that they have been since the 90s. It's been there. It's part of the algorithm back then. You understand? So you don't have to worry about any of these strategies, having to worry, no, there's a news event coming up. No, you relax, you watch, and then, you wait for the output. That's it. That's it. So other than that, there's nothing else. So yeah, I mean, yeah. So we can just say now we can just go back to our original chart. You can just go back to our original chart just to show you um, what we spoke about. You know, let's go back. Go back to our original chart now. Yeah, but like I said, it doesn't really matter which time frame you're using, but always make sure always make sure that, whether you taking the first entry, you have this three: a low, your lower high, your lower low, or your high, your lower low, your lower high, or you can have your lower high and then your low and then your lower your higher high, then come back to, you can eat any of these three, even turn upside down any of the three, the first three, for you to take the first trade. But if you miss the first trade and you have already the four options, then that's good for you. That's good for you. And then you can just be able to, take the second one and then capitalize on that one. But like I said, keep in mind, make sure that your account is able to hold the downside, which is the stop loss side of things. Don't it's not this is not the kind of strategy that is for full margin traders, that I will exclude. This is for consistency, slowly, slow by slow consistency there being applied, but you will definitely make money. There's that kind of the long money strategy. All right, guys. No, thank you very much for joining me today. Thank you for watching this video. If you like the content that I'm providing you guys, you can leave a like on the video and then subscribe to the channel, and also click on your notifications so you don't miss any updates in any new setups or any new strategies that are out there. I only trade Nasdaq and gold. Yeah, I find them very much, reliable to the kind of trading style that I'm used to. So they really respond to what I trade, whether it's other blocks, whether it's what is this, time-based strategies, or whether it's this kind of price action, pure price action strategies. From flex to channels, those things, the basics. It's the basics. You don't need to fool your chart with too many lines, this and this. No, just the basics. It's what makes you money. The line, too many lines in the charts, it's confusion. That's confusion, guys. You don't know. I wouldn't even know what to tell you. So yeah. For those that know my Facebook channel or my Facebook page, you can always shoot me a message, show me your analysis, then I can let you know if you're on the right track, just to help you with your growth on your trading journey. All right. No, thank you very much, guys. See you on the next video.